Well, after making some New Year's resolutions that involved financial health, we're taking it a step further and talking about your credit score and why it's so important. So we've got Monica Munoz-Andry, who's a financial health program manager at UFCU, to give us her expertise this morning. Monica, good morning to you.
Good to be back, Rosie.
Lovely to have you in studio. This is a great opportunity for us to hang out. Doesn't happen very often. But let's talk about breaking it down, because I think a lot of us hear these terms. We even might use them every day, but we don't truly know what they mean. What is a credit score? What does it consist of?
A credit score is a 3-digit number that determines an individual's creditworthiness based on factors from their past financial history. In short, it tells the lender how creditworthy you are and how likely it is that you're going to pay back that loan. Credit is very important in our lives because it determines whether you're going to get approved for a loan or if you're going to be paying a high or low interest rate. In general, a high credit score means that you get better loan terms and lower rates, which is great.
Yeah, and not only that, but you indicated that there are a lot of things that can be affected by your credit score. So I'm interested to pick your brain a little bit more about that. Credit worthiness, though, do we have it? That's what we're going to learn about today. It's a fun term. Tell me a little bit about why a credit score is so important and how it can impact you and what you get up to.
A credit score can range from low to high, and a low credit score can cost you thousands of dollars. I love to use this example to show that. If we take a $20,000 car loan at a 60-month term or 5 years, and we compare a 2% interest rate, which is for great, excellent credit, compare that to a 15% interest rate, which is for low credit, you can see that at the end of the calculation, at the end of the term, the 15% interest rate paid $7,550 more because of that interest rate. And you'll notice that the payment only differs by $126, and a lot of times people overlook that. And that is real money, folks. I mean, you could have gone on vacation, you could have done an emergency fund or paid off a loan. And a lot of times when people shop for cars, they pay attention only to the monthly payment, but if they paid attention to the interest rate, they could see that they're paying thousands of dollars more in interest. Another negative impact of a credit score is that you could also pay higher premiums on your home and your auto insurance, and also apartment deposits because they check your credit.
That is, first of all, that's pretty shocking to see, like, the proof in the pudding as to, you know, how much a credit score can change how much money you're paying out. We might be hurting ourselves here. Okay, so let's talk about all the factors that go into your credit score. This seems like what we should be watching for to make sure we have a good one.
Absolutely. So 35% of your score is made up of your payment history. That means that if you do nothing else, pay your bills on time. A late payment can really hurt your score and lower it, and it'll also show up on your credit for 7 years.
Wow.
You want to make sure you keep in mind that late payments are not reported until they're 30 days late, so do everything you can to make that payment before that mark. The second score that impacts the credit is 30% of your score is impacted by your amount owed, or what I like to call your capacity. That means that you want to keep as much of your credit line available as possible. It's a myth for you to go get a credit card and charge it up and then pay minimum payments, because you've just null and void any points in this category. The more available you have, the more points you get. You want to make sure that you pay off your credit cards in full every month if you can. The third category that impacts your credit is the length of credit history. That means that you want to keep your oldest trade lines open because they have that history. If you're not paying a monthly fee or an annual fee, it's a great thing to do. If you are, call that creditor and ask them to change to a free program, but make sure they can transfer over that history with it. The fourth factor that plays into your credit is the new credit, which is 10% of your score. And that means that you want to be very selective about what credit cards or what new lines you obtain. You don't want to take those 30 to 40% off specials for a credit line if you're really not going to use it, because you do take a hit the first couple of months you get it. And then last but not least, the last factor in your credit score is 10%, which is mix of credit. And that means that you want to keep a good balance between your installment loans, which are your mortgages and your car payments, compared to your credit cards, which are your revolving loans.
I didn't even know that there was different terms to describe credit. So I'm learning a whole lot in our conversation today. How about 1 to 2 tips for people who are looking to start improving their credit scores? Because once you know what your score is, right, it's a game of moving up.
Just the 2 main things is pay your bills on time and keep as much of that credit line open available as possible. Pay it off in full if you can.
Okay, and where should someone start if maybe they want to build credit for the first time? Because I feel like that's pretty daunting. Or maybe they need to rebuild credit because they've had a couple of bumps in the road.
Absolutely. A great product to use to build or rebuild credit is a secured line of credit or a credit card. That means that the loan is secured against funds in your deposit or savings account. It's an easier loan for a lender to approve because there's less risk, knowing that they can always collect the funds in your account if you choose not to pay. I will say that I encourage everybody to visit UFCU and sign up for our free 30-minute credit review, where we'll sit with you, review your specific report, go over the ins and outs of credit, and help you find ways to improve it.
Not only that, Monica, I know you guys do it with a lot of compassion, because I feel that there's probably a bit of a stigma to like having somebody look through your finances, but you guys are here to help, right?
Absolutely.
Yeah. Okay, we appreciate your expertise. I've written down lots of new terms this morning, and thank you so much, Monica, for joining us.
It's great to be here.
For more information like this and on other finance-related topics, visit ufcu.org/KXAN.